Welcome to another Major Market Movements End of the Week Market Review for May 22nd, 2015 on Quad G. And we're taking a look at the FX markets, the equity markets, some of the energy markets, and a few other miscellaneous markets that were requested at the forum for me to look over. The Euro here, starting off, we get a looks like a solid close on the day and the week today after an initial bump to the upside here, which tested the 20 DMA as resistance, and you can see we got a push right back down. So my expectation is that going into next week, we will see some follow through to the downside based on this, and more than likely come down here to test the lower Bollinger Band at a minimum. The week closes as an inside double key reversal, setting a very key top, key resistance point for this market right at 114.67. And the EWO did not give us a negative divergence at the top here, and has slipped down to, let's see, the last swing low for comparison is still right about here. So we haven't really created a negative divergence on the bottom side yet either. The RSI, we came up here to test the 70 level and we've ducked back down. Next week, if the overall trend is going to maintain a midterm bullish bias to the upside, I would want to see the price keep the RSI above the 40 level or 40 level and higher and not dip below it. And the MACD has opened up to the downside on the daily, and on the weekly it's still open to the upside on the weekly. So I would say that the euro is definitely taking a nice tumble here this week, and I would expect to see some fall through into next week. There are a couple points of support that could cause the market to turn around fairly soon for at least a counter trend rally, if not something more powerful, something more bullish to the upside. Let's go ahead and move along here. Take a look at the Great British Pound. All right, so the pound also looks like the day's closing as an inside double key reversal, setting a key top at 5,700 level. So again, the expectation would be to see some fall through to the downside going into next week. However, we are testing the 20 DMA right at this moment. Will it hold or not? It's hard to say at this point, but there are certainly no signs of buoyancy here at this point in time, possibly because it's just a Friday. We'll have to just wait and see what happens early next week with that. The weekly does close just an inside negative week compared to last week, so it's neutral on the weekly closing basis. And the daily EWO, there's no negative divergence on the top side, no negative divergence on the bottom side. Really no pointed direction one way or the other there. The RSI, after testing the 70 level, has come back down here and could be setting up a negative divergence on the bottom side. If we go a little bit lower, we could cause the oscillator to move lower than the last swing low, even though the price is at a higher low compared to the last swing low. So that could allow for the next thrust up to produce a negative divergence on the top side and possibly a significant top. The MACD on the daily has switched over here and is now open to the downside. And on the weekly is still open to the upside. So overall picture, I think we could see a little bit more downside movement into next week. I think the overall trend is for the midterm, it still has some good midterm potential to the upside in it left, but just I would expect to see some trouble still into next week, but possible chance of reversal. Based upon this inside key reversal, more than likely you'll see at least a little bit of fall through. It could be that back out here, we could be, that's not the trend line I was looking for. Hold on a second here. See if we can get adjusted here. This is not the best program for doing this, but yeah, I'm not going to mess with it here. I'll show you in the other trading view slides here in a minute. Take a look at the US dollar. All right, so the dollar, let's go to the daily. The dollar pushes higher again. That's outside key reversal compared to the previous day, which was negative. So it does set a key. It's not in the best of placement, but it does set a key low there at 94.82. Bullish above, bearish below. The QG3 here looks like it just ticked over today into a bullish alignment to the upside. So we could be coming up and testing that upper Bollinger Band fairly soon, I think. The week does close as an inside double key reversal, so that's bullish, setting a key low for the midterm right there at, which would typically be a midterm support level at 93.13, potentially bullish above, bearish below. We are coming up to test this breakdown point roughly around 96.32. So that's a key point of resistance also that we're coming right up into. That's a weekly. Let's look at the daily. Again, no positive divergence on the EWO to the in this last move to the downside, and really not getting a positive divergence on the top side yet. The RSI did dip below the 40 level, deep into right into the upper 20s. So this could be just a corrective move to the upside. Again, we'd want to see the RSI stay below the 60 level to maintain a midterm bearish bias to the downside. And US dollar on the weekly MACD is still open to the downside, and the daily has crossed over and become bullish with a bullish alignment to the upside. So overall picture for US dollar, I think in the short term, we're at least we're still bullish here, especially above that 94.82 level. However, the longevity of this run, I think, could be limited, and we'll take a deeper look at that with the LA wave count in just a moment. USD JPY. All right, USD JPY daily closes higher there, pushing the upper Bollinger Band. QG3 is in a bullish alignment to the upside, and the week closes what looks like in the top 10% of the weekly range. So we could eke out some more gains next week. Nothing to see on the EWO. We do see the price coming up, busting above the 60 level. So I think this action I think there's enough momentum here to cause the RSI to come up and test the 70 level fairly soon. And the MACD on the daily is bullish to the upside, and on the weekly, it is bearish still. So again, I think we'll see USD JPY maybe move up a bit more, maybe test that 122 level, and then we'll have a decision time. I think we could see a corrective, at a minimum, a corrective pullback, if not a major reversal. All right, so here's the Dow. We busted up into new highs here. Looks like we got a 1, 2, 3 at least. This could be a wave 4 pulling back here, and at least one more push higher. Next week is possible, I think. For now, the Dow holds a key support level right here at 17,925. So as long as we're above that level, I think the Dow could continue to edge higher. Bollinger Band, the upper Bollinger Band being pushed. Previously, we've ducked back in just a bit this week. And on the weekly, we do get a small inverted hammer candle that does set a key resistance point right there at 18,351. Is that a tradable top? Potentially. Yeah, I would want to see a little bit more evidence of a reversal before doing, jumping onto that. If we had closed a little bit lower, saying got the outside key reversal, that would have been a far stronger move. If we had closed this week below this previous bullish open there, the open was at 18,187. If this week had closed below that, that would have been a much stronger reversal pattern. But as it is, it's somewhat of a small inverted hammer. It's still dubious in my opinion. The EWO here, we got a slight negative divergence on the daily here, comparing this last swing high. We got a new higher high in price, but the oscillator is still in it lower high territory compared to the last swing high. So negative divergence on the EWO there between those two tops. And if we go back here a little bit more, you can see that we actually have a double negative divergence there between these swing highs. Are we ready to turn around just yet? Maybe, maybe not. I think we need to wait and see. Give this market some more time to show us what it's really got. If we see a quick move down, takes out this last short-term swing low, that's probably our best indication that yeah, this market may have topped out there, and it might be worth getting short again. Or while we're above that swing low, though, I think, and the fact that we only have 3 waves up makes me think we could eke out even one more incremental high for a 5th wave in this current move to the upside. That's the weekly RSI. Let's go to the daily. All right, so we've come up here, we've tested the 60 level. We're seeing a little bit of rejection there off the 60. So that's potentially bearish. Again, I'd want to wait to see some follow through before doing any serious commitment to action-wise as far as trading is concerned. And The MACD on the weekly has closed out some, neutral, and daily is open to the upside. That's bullish. So overall picture for Dow, I think we're still in this very tedious phase where we're getting an incremental high. We may or may not have gotten a rejection. This market is prone to fake us out, with several initial indications of possible reversal, only to see it washed out later. So I think it's best to just be patient with it for now and let it give us a far more solid indication of a reversal before doing anything with it. Okay, crude oil. Let's go to the daily. We did confirm the bullish Harami reversal pattern here. It did set a key low in this market right at 57.93. We've gotten a pullback today, and that's okay. It's going to, I think this is just a corrective move to the downside. You see that it came down to test the 20 DMA, and intraday it proved as support. We've bounced back up here to close right at the 3 EMA. So I think there's still some good potential for movement to the upside. And the weekly closes somewhat of a neutral pattern there, just a negative week that's somewhat range bound. All right, the EWO on the daily here. Really not much to show you there either. That trend line between these swing lows is being pressured a bit, but I think we could still see a bounce off of it going into next week. The RSI, we've dipped back below the 60 after visiting, not quite visiting the 70 level, just a hair below it, but we've come back into the 50 level, and that's okay. The most key support here is at the 40 level, and we're well above that so far. The MACD on the daily is looking bearish to the downside. It's open to the downside, and the weekly is still open to the upside. So I think we're probably just in a corrective consolidation pattern here, and I do think we'll get at least one more impulse to the upside, and we'll take a look at the LA wave charts to give you an idea of what's going on in the smaller time frames. All right, let's go to those charts. Starting off with crude here. This is the midterm count. I do think there's good evidence that we've got 5 waves to the downside finished, and now we're working on another impulse to the upside. It's not quite finished yet. We got at least one more impulse remaining that I think could come up here to test the 97 level, or not 97, 67 level, or 66, 67, somewhere in there, to finish wave 5 of 1, and then we may see a larger pullback, corrective period. We zoom in here on the count, and I think we're working on this. Not working on. We'll finish this wave 2 or wave 4 sharp, and now we're working on a new impulse to the upside, which is still in its infancy. Natural gas, we've got 5 waves completed to the downside, but we haven't quite hammered out a full impulse to the upside yet to produce a standalone 5-wave move to the upside. We're still, I think, wave 4 here is in the works, and we're still waiting for that to finish up, and then we'll get at least one more push higher into wave 5. into $3.24, possibly at that 38.2% Fibo, maybe a little bit higher. There's also the possibility that we have a wave 1, wave 2, sub 1, sub 2, and a 3 of 3 to the upside. That's certainly possible. This rather sharp decline back here in December of 2014 is begging to be filled, and this run does have the potential of doing it. So I'm still interested in being long in this market. All right, Elliott wave count. It did look like the other day, it looked like we may have finished 3 waves down. We're going to start an impulse to the upside, but then the price doubled back, and now it took out that last swing, that key swing low there at $2.90. So whenever you see that kind of movement happen, it's more than likely going to be an X wave. And sure enough, I think that's what we got is 3 waves down. Basically, you get a false impulsive move, which is typically an X wave. And now we're working on possibly another zigzag to the downside for a double zigzag move, which should be sharp. Wave 4 sharp, which would alternate with the wave 2 flat previously. And I would also want to see this correction finish above the top of wave 1, which is at $2.82. Want to see that finish above there, somewhere between where it is now and that level, and then see another push higher into wave 5. All right, Pythagoras had a question about the Nikkei, and the Nikkei is a mess right now. It had this really nice impulsive drive to the upside, had a nice ending diagonal pattern to it. For wave 5, looked like we got an initial impulse to the downside. I was expecting a 3-wave correction into wave 2, but then we break above the previous 5 of 5 here, the way I had it counted. So where could this be heading off to, LA wave wise count? Your guess is as good at mine as with this count. Again, this is a highly manipulated market by the Bank of Japan. So it could be that they're just doing all they can to grab every single excuse for shorting the market, just running every short they can out. Every time a short position gets built up, it seems as though they do what they can to run them out of Dodge. And so LA wave wise, it's just not becoming, it's just not very reliable in this market either. And I really don't know what to tell you where this market's heading. All I can tell you for now, it does look like this last swing low, that low at 19,033 is key support. Dip below that, and it could be an indication that the market is maybe finally turning around. We'll see. All right, you also had a question about the NASDAQ count. First off, I'll look at some technical analysis here. We've got this long-term trend line. It's been tested several times. We're kind of leaning against it, if you will, with this ending diagonal pattern just above it. And we zoom in here. That trend line is currently below. Well, that next week it's going to be below at about 4406. Break below that, and that might be our indication, a good indication that maybe we finally topped out. We zoom in a bit with the LE wave count. Well, actually, we'll take the longer term perspective. Now the NASDAQ 100 is still below its year 2000 high. The composite, however, did tick above it. So there's a little bit of a non-confirmation between the two going on. This could still technically, as far as the 100 is concerned, could be a 3-wave corrective move to the upside for a wave B. The other alternative is that this is perhaps a ABC move to the upside. It doesn't quite look impulsive, I guess. You could drag this wave in, but again, it's not an ideal impulse count. It looks better as a three-wave count. You get a ABC, X wave, and then an ABC to the upside. Now this could be a wave 1, this could be a wave 2, this could be a wave 3 of a very large ending diagonal pattern. Either way, once wave 3 is finished here, or wave B, C of B, we should get a corrective move. And if we zoom in here on the count, we do have a nice 1, 2, 3, 4, 5 up for A wave B, and then we'll go to the weekly. And it looks like we got a wave 1, wave 2, wave 3, wave 4. Now we're working on this ending diagonal, wave 5. We'll go to the daily. So wave 5 here does have 1, 2, 3, 4, and 5 finished, though I would have been eyeing this a little bit more heavily if this move had been impulsive, but it looks like 3 waves, so it looks corrective. So all I can tell you is we could continue to grind a little bit higher in this market while we're above that 43.80 level. If we break below that level, then I think that's going to be the best indication that maybe this ending diagonal is finished, and concluding this significant top, if not major top, and we start to see a larger sell-off to come. But for now, I don't see anything here that's worthwhile chasing after one way or the other, whether to the long side or to the downside. All right, let's take a look at the 10-year note. We got 1, 2, 3, 4, 5 waves down completed for wave 1. Now we're working on this wave 2 correction. I still don't know quite yet whether or not we have a flat correction or a sharp correction taking shape here. It does look like we have an ABC and an X wave and possibly an ABC to go for a double zigzag to the upside. That's certainly possible. Or if this current move to the downside extends and we come down here to challenge the previous low here at 126 or so, it could be we got an ABC and then an ABC for a wave B. So ABC up for A, ABC down for B, and then we might get 5 waves up for a wave C for a 335 flat. That's certainly a possibility for a flat correction. So still too much. There's no chop in this market in this corrective period to do anything with. So I think it's best just to hold off before jumping in on anything. US dollar, long-term view, we got 5 waves up, finished. Working on a wave 1, 2, sub 1, sub 2 with an ABC expanded flat count. And if we zoom in on that count, we've got ABC up for wave A, ABC down for wave C or B, excuse me, and now we're working on this wave C, which it could be a 3-wave move. I prefer a 5-wave move. But I do think this market may be wanting to test this 38.2% Fibo right around that 96.50 level, and that may come early next week. That could bring the conclusion of a wave 2, and then which would see some fall through to the downside, which could be working on wave 3 to the downside. The other possibility I see is we could get a larger 5-wave move to the upside with a wave 1, wave 2, maybe wave 3, wave 4, and then a final 5th to the upside, which could fill in this little manic drop to the downside that never really got filled. They're right underneath the 61.8% Fibo. I think that is a unique possibility that we should watch for as well. Taking a look at the euro, the 61.8% Fibo is also right there, and we could see the market test that early next week as well. That could be the conclusion of wave 2 here and the start of wave 3. That's certainly possible. So again, we'll just have to wait and see. Watch for some bottoming action in that market. Great British Pound. Threw us for a loop here. It looked like we were going to get at least, if I zoomed in here, this looked like a triangle pattern. And I was expecting at least another thrust up to give us a initial exit on our position. But it was denied. It didn't get that last thrust up, and we've got pushed down. So it does look like this was an X wave after all. And now we're working on another zigzag to the downside. And this market too may want to come down here to test the 61.8% Fibo. They're at 1.5362 or so, maybe a little bit lower. Maybe fill in some of this this manic jump here to finish out wave 2. USD JPY, looks like wave 4 finished. Now we're working on wave 5. Again, I think we could be testing this 122 level fairly soon, possibly next week, and then possibly turn around either into a corrective sideways move, maybe come back here to test this breakout point down here at 120.35. That's a possibility before moving higher. Or it could be a significant top or major top, and we see a larger move. It would require a full impulse down, 5 waves down, that comes all the way down here and takes out 118.90. That would be our best indication that this market has put in a major top. So we'll just have to wait and see what kind of attitude we get with this market going into next week and maybe the week thereafter. There was a question on the forums. Buy Unicorn was the username. And the question was what my Elliott wave count for corn was. And I do think it's possible that we finished a major wave 5 here back in September of 2014. I do think we count out 5 waves to the upside fairly well. And now we're working on this 3-wave pullback. Now, is this 3-wave pullback finished? It's certainly possible. We've tested the 61.8% Fibo, but so far we're just kind of dancing above it. However, if we look at the weekly chart, let me zoom in here. Not this week, but last week we did get an outside double key reversal, setting a key low there at 352. And 6/8 is what that is, or basically 3/4 of a point. But the price this week looks like we've doubled back a little bit, and for a corrective move, let's move in to the hour, get a closer look at this. So we got the shot up in corn. That definitely looks impulsive, and we've got it looks like an ABC down. This looks like possibly an X wave to the upside, and now maybe another zigzag to come with an ABC to fill in the rest of this gap up. That's a possibility, and then a push higher. Corn's not in the best spot seasonally. Could be seasonally. I think we top out in June, I think, and see a slide seasonally into October. But I've got a lot on my plate right now, and I can't possibly imagine taking on another market to report on. So if you want to take a stab at this market, I think there's enough there to warrant an entry to the long side. You definitely want to have your stops below this 352 level and look to get in long anytime really underneath this 362 to maybe as low as 356, somewhere in there. That would be a good entry zone. But after that's finished, you'd want to see another pop up here. And that preferably, if it's truly bullish to the upside, you want to see the next impulse come up and test this last swing high up here of wave B at roughly about 397. And you want to see that done in the course of just a few days, few sessions. There was also a question about DBA. DBA also on the weekly chart did set an outside key reversal on the weekly. We did see some fall through to the upside. And this week we see an outside key reversal to the downside, kind of countering the fall through of last week. And if we zoom in here a bit, so the one reason that I'm not too thrilled about this move to the upside is the fact that the previous move down does look like three waves, like an A, B, C. And before that was a three-wave move up. So this could be ABC up, ABC down for a B, and this might be almost a impulse to the upside for wave C. So this could be this almost looks like a 335 flat, which would mean that it's possible the price could dive down here and put in at least an incremental low below that 2189 level. Key resistance, I think, is going to be right here at the top of that outside key reversal on the weekly at 2280. So if I would think that the price would come down here and take out this last swing low. I think that's possible, or at least double bottom. However, if you see this price kind of stall right here and chop sideways a little bit more and take out 2280, that could be playing a bullish inverted head and shoulders pattern where you have a left shoulder here, a right neckline, a head, or no, excuse me, left neckline, the head, here's the right neckline, and then the market could be working on a right shoulder here before pushing up higher. So, very tedious range bound movement right here. Nothing real solid one way or the other in that market. And you also had a question about the USD CHF. And speaking of CHF, this was certainly a congestive heart failure here for a lot of traders with this, with the Swiss National Bank coming out and unpegging from the euro quite unexpectedly, created this manic drop to the downside. The market did a great job of coming up here and basically repairing some of this damage by retracing most of that incredible drop. But so far, it looks like the market's drifted down lower. I think it's trying to figure out where it needs to be, where it wants to be. The Elliott waves has smoothed out here, and it does look like we've got 1, 2, 3, 4, 5 to the downside for wave 1, an ABC flat correction for wave 2, wave 1, 2, 3, 4, 5, truncated fifth there for wave 3, and now working on this wave 4 sharp, which if it stays below that 94.89 level, I think there's a good possibility you could see a reversal there and see another drop to the downside into wave 5. There's certainly a more aggressive count here. This could be a wave 1, wave 2. This could be a sub 1, sub 2 before a 3 of 3 to the downside. That's certainly possible as well. If we break above that 94.89 level, then the chances of this being a wave 4 impulse are out the window, and we could have the probability start to swing in favor of this just being a three-wave move to the downside, a corrective move, and a possible impulsive drive to come to the upside. So very key level right there. We'll have to wait and see how the market reacts to it. Again, it's another market I can't really dive into. I've got my plate full with all the markets that I have right now, but I don't mind covering these markets for you. If you put a request in on the forum, I'll do my best to cover it. Give you a quick analysis anyway of where I see the market heading. All right, so that's it for our peripheral coverage of the miscellaneous markets, the FX markets, equity markets, and energy markets, some commodity markets even this week. So that's it. I hope you all have a great weekend, and we'll be talking to you later. Adios.